Guys, once again, I want to welcome you back. So thank you guys for watching. So today we are going to be looking at how to determine market direction with no daily bias. Like you're not required to have a daily bias for this. So just we are going to be using three steps. We are going to determine the market range. You get where the market is ranging, and then in that market range, we are going to be identifying either areas of transition or order blocks for our entries. So just basically that's it. So before we determine the dealing range, you have to look at just the general outlook of the chart of where the market is going. So if at all we are to make a sketch of it, we are seeing this kind of thing. So which means that we can say that this is a bearish market. You get, this is a bearish market. So now, if that's a bearish market, then we are going to be looking for maybe more opportunities for us to sell, or for more, we are going to be looking for reasons to sell. But remember, if at all, for instance, now I'm on H1, sometimes you may find that on a given day, we are in a pullback. And then remember, pullbacks, if at all we are dropping like this, a pullback facilitates, we get a pullback and then we drop. So for this strategy, mainly, you're going to be capable of taking entries on a pullback, because you can at least try to determine where the pullback will end so that you can take on the impulse move. So now, if at all we are to start here, we have a break of structure there. You get? We have our break of structure there. So now that is break of structure. Now, what do we expect? We start to look for, if at all we break structure, we look for areas of supply. You get? We look for areas of supply for us to take more entries that are bearish. So now when we break there, I can look at we can look at this, let's say, breaker order block. We have a breaker order block there. But remember, there is something that I want to address to bring it to your attention, you guys. It's that, like, when you're trading, we have to be as flexible as we can. You get? We have to be as flexible as we can. Try to be so flexible. So, for instance, if I told you broke structure and then you were taking an entry there, you get? That is your entry, your stop loss just above this box. You get? If I told, like, that's where our stop loss is, like this area here. We can take our entry here, and then what do we expect? We expect the market to, like, to do this. Possibly we tap there and then we drop further. You get? We drop further. So now, but sometimes that's not what we are given. So if I told you took an entry there, I believe that would have been your take profit, because that is also another point. No, this is what I want. This is also another point that we are considering, or we are looking at, to see how the market reacts to it. We are going to be seeing how the market reacts to it, whether to determine whether it's going to continue selling. You get? So okay, you've taken your little profits there. You get? By the sometimes these entries where, let's say, you're getting in like there, and this is your stop loss, and then your take profit is there's something I want. Yes, your take profit is here for sure. This is not really worth it. This is not really worth it. This is 1 2 1 2 3. Yeah, okay, 1 2 3. That's worth it somehow. So okay, you're risking $1 to get $3. Okay, that's fair enough. That's good. So now, okay, you've taken your profit there. You get? And now the market pushes back up after you taking your profit. Now, this is what I want to show you. So now we have more points. Remember, this is the area of supply that facilitated that sale. You get? This is another block, and then this is the point of origin. Like, this is where we got the origin of this move that broke structure there. So now we are mindful about what is happening here. So now when if we break structure here, let me illustrate here. When we break structure there, that is our break of market structure, and then we come and break and close above. Sorry about that. And break and close above this area of supply. So we can say that this is our change of character. You get? Remember, this is H1. Now, this is where things get interesting. So now, if I see something like this, what am I looking out for now? I'm looking for buys. So which means I have to highlight my areas of demand. You get? My areas of demand. So this is my transition area. You get? So I consider this area of transition as my demand zone. It is an area of transition. So this one becomes my demand zone. So here I take my buying entries, targeting what? Targeting this high. You get? So which means if at all we were getting a pullback, you get? This is what I wanted to illustrate. We moved and then we got a transition area here and then we moved up and broke above. You get? So if something like that happens, it means if at all the market is dropping back like this, you get? We are having a dealing range over there. You get? So what does it mean? If at all the market drops like that, you get, after creating a change of character. If at all we did, if at all, let's say, it didn't buy in this transition area, you get, or if at all we violated it and then came and broke down, then this would be a change of character. This would be another change of character, but reacted nicely to this area here, this transition area, and then we moved up. So if I told you had taken your entries here, this is your take profit. You're watching over this. You get? So what did we really get? So we expect higher highs. You get? We expect higher highs. I believe you guys now are starting to understand how these moves like start to come. You get? You guys, if at all you are capable of determining a trading range, like it will change, a lot. It will change the way you approach like the markets. So now what we are expecting, these moves that are going to proceed up there, you get? We are going to, that's what we expect, that's what we are anticipating. But then remember, we just anticipate, we are not the ones that are really driving, you get, the market. So which means we have to be so flexible. And then we have to set our boundaries and our limits, because we have to watch what they do and then we follow. You get? So now we can see that we pushed up, but then the market quickly dropped down. You get? So now where is your new range? You get? Where is your new range? Now this is our old range. You get? This is our old range. Now we expect, what do we expect? This point, okay, this area, or this area of supply is holding. Now we are targeting in this range, we are targeting this area. This was our area of demand. You get? That was our area of demand. Let me change just color here. You get? This is our area of demand. This is where we bought and then we moved up. So as the market drops back, you get, as the market drops back, possibly we're not able to take, there are other entry models that you can use to take sniper entries here, or you can use other entry models to determine, like for instance, we have a fair value gap here. You get, someone would target this fair value gap to take an entry. So which means someone is taking just an entry, maybe midway this fair value gap, for instance, like there. You get? We have a fair value gap. You guys, ICT traders, I believe you can understand this. We have a fair value gap, which is a sign that there is strong momentum for sales. You get? So if I told you got in here, what is your target? Your target is this area of liquidity here. You get? Remember, you guys, remember, it is possible that the market can reach here and then we get something like this. We take out this liquidity. By the way, this area becomes an area of liquidity because we're having equal highs, equal lows here. You get? We're having our equal lows over there. Let me use this. These are our equal lows. But now, so what I was trying to illustrate to you, it is possible that the market can do this and then it pushes up. You get? So we have to be so careful. But what did it really give us? We can see that we broke, and then we broke this level. So which means we got a change of character. You get? We got a change of character. So what does it really communicate to our brains if at all we say that we got a change of character, and we have to label it there? So which means now we are looking for selling confluences. You get? Now we are looking for sales. Now this one here becomes, this is our area of transition. You get? This is our transition area, or our area of supply that we can start to look at. You get? So we can highlight it, and then um we can even label it there. You get? This is our area of supply. Now there are other confluences. There's, you can do refinement, you can go on M5, you can look for ways of determine, like I talk about more entry patterns and entry, like how to really get in when we in the part of mentorship. So I believe now you guys have picked something as far as picking the trading range is concerned. You get the dealing range. You have to determine where the market is gravitating towards. But then if you just get one point, you get where you can start. You can start drawing those dealing ranges now. If at all, now this is our range, you get, and this is our low. You get? Now this one becomes our new trading range. This point here. This point up here, you get? Now we can even shift it up, and then we have this one here. But where are we going? We are bearish. So we look for supply areas of supply. By this is an area of supply. Let me not confuse you. You get? This is our area of supply. This is our area of supply. So we've broken structure. We've gotten a change of character here. So we look at areas of supply, and now this is our new trading range. So as we pull back, we know this is a pullback. You get? We know this is a pullback. When would it be a change of character? If at all we start to break up like this, then it would be a change of character. So that's how we can be flexible. You get? This is how we can be flexible. So we take our entries there and win, and then we drop. So what really happened here? We came and broke our trading range. Now the trading range shifts from up there, we come to this. You get? And then this has been our point that we've broken to create this new low. You get? So what are the points of interest? Points of interest under this new trading range. This is the extreme supply, which here we mitigated. Now we start to consider this area here. You get? This is the new area of supply that facilitated this break of structure. Let me clearly show you. You get? So we are being flexible and moving along with the market. You get? So now that one becomes our new area where we trade, like where we get in. You get? This is where we get in. So we keep on adjusting, and we are finding our trading range. And then you can see that if I told you, like you do a lot of practice, or like on this, you'll be able to determine good take profit points, as well as determining good entry points. You get? So for now, you guys, I wish you the best. Keep practicing and keep subscribing. Peace.